My name is Waqas Mirza. I'm the CEO of a technology company called Avanza.
Chip Simmons, the co-founder of Tokenized Energy, and have been the CEO of multiple oil and gas companies in the past.
All right, so we're here to unveil Tokenized Energy. So let me start by asking you, Chip, what is Tokenized Energy?
Well, we are oil and gas guys. My partners and I, Adrian Macias, who's here, and Aaron McCommett, have deployed a little shy of $1 billion for 3 different private equity funds. And we've also, one of our partners has also built a land services company. So at our heart, we're oil and gas guys. And one of the things that we realized is that private equity funds, public companies, other investment funds, family offices sort of needed us for access to oil and gas opportunities. And we realized that was really at the core of what we were doing. And so we tried to come up with a different delivery vehicle for how we provide that access to the people that are interested in what we're doing. And after looking at the space for a while, determined that tokenization was the answer. We're not coders, so then we reached out to Waqas, who we actually met through this conference 2 years ago on the introduction of Lee Bratcher. So he helped us build the platform, and that's a long-winded answer to your question. So.
Thank you, Chip. But how does oil fit into the whole RWA tokenization movement and buzz? Why oil?
Well, it's a perfect fit. And I'm not saying that just because we're in the tokenized space now. But those of you that might be familiar with oil and gas, it really is already fractionalized. So if you think about it in the U.S. as opposed to in a lot of foreign countries, a lot of the mineral interests are owned by private parties and not by the government. In foreign lands, typically the government owns the minerals. So right away, just at its core, you're creating another interested party, the mineral interest owners. But then when you think about the cost of drilling a well, like pad development is common, and what that means for those of you that aren't familiar is you've got the pad from which you drill the wells, but now anywhere from 4 to 6 wells is drilled in a unit from a single pad, and the cost of those wells probably ranges from $8 to $12 million, depending on the depth that you're drilling to and the length of that lateral. So if you multiply that out by 4 to 6 wells, you're looking at $50 million or more that's going into a single pad. And so it's a lot of capital, and these days, this wasn't always the case, but these days the operator and driller of that pad doesn't own 100% of the working interest in that pad. So those dynamics end up creating multiple constituencies. You end up with the operator, you end up with non-operated working partners, you end up with mineral owners, and then you've got people that buy investment firms or financial firms that buy those royalty streams. So you end up with multiple constituencies. So even without tokenization, oil and gas really is at its core built on a fractionalized partnership model. And so as we started thinking about that, we really realized that tokenization was actually a good fit. So not only does it match that sort of fractionalized partnership business model, but also solves for the access problem that I alluded to earlier. But Waqas, I would think that you're headquartered in Dubai, but you've also got a presence now in the U.S. and in other places in the world, and you have the technology that supports tokenization platforms. So you're uniquely positioned, I think, to have a much broader view of it than I do in terms of the various asset classes that are going to be tokenized, but then also regionally, because I know the perspective from the Gulf region is probably very different than it is from the U.S. So how do you see those things from where you sit?
So in Asia and the Middle East, real estate is leading because it ticks all the boxes in terms of capital appreciation and yield for retail investors. So people are generally comfortable, both ends of the spectrum, the developers, platform operators, and retail investors. Everybody is very comfortable leading with real estate. what we've typically seen is that in a jurisdiction, when a couple of real estate marketplaces go live and are successful, we've got 3 running in UAE, 3 real estate tokenization marketplaces. Once these go live successfully, we then typically see financial instrument follow suit. So we see financial institutions bring in bonds, tokenizing bonds, followed by commodities. So this is a set pattern that we've seen across multiple jurisdictions. Starts with real estate, goes into financial instruments, mostly bonds, and then commodities, mostly gold. So this is the trend that we've generally seen across Middle East, Asia, and some parts of Europe.
Gotcha. Well, and for any of you that haven't been to Dubai, I would highly recommend it. But one of the things you immediately realize is how far the U.S. is behind a lot of the rest of the world, and particularly in the Dubai Gulf region in terms of tokenization. I mean, they're literally light years ahead of us in terms of adoption. You just feel it as soon as you step off the plane at Dubai.
So, Chip, tell us, how does Tokenized Energy actually work? You know, I wouldn't ask you to go tell us what's under the hood, but from a business model point of view, from the different components of the marketplace, how does it come together? How does it actually work? And most importantly, how is it different from a crypto token?
Well, gotten that question a few times today, but technically the way it's structured is, you know, our platform is going to list investment opportunities in upstream oil and gas assets. So what we do, since we've done this for a living, as you heard me say earlier, we source those assets, we put the ownership of them in a special purpose vehicle, which is either an LLC or a limited partnership, depending on the state that we're in. And then we tokenize the equity in that LLC or LP. So it's a special purpose vehicle that just owns the oil and gas assets that you are investing in. And then we manage that asset for you for a small fee. So you can't, it's really the closest that most people can come to the ownership of oil and gas assets. It's a difficult space to get into. It's expensive, it's hard to find these things, it's hard to vet these things, and it's hard to manage these things. And so we perform all of those services for you, and the way we deliver that is through tokenization. So what happens is, you know, we will put the offering on the site. You will subscribe to those tokens. It's a very user-friendly interface. It feels a lot like, you know, online banking. You sign all the investor docs. There's a data room that you can review. You can ask us questions. It's a typical sort of offering process. It's just very streamlined. It's very quick. It's very easy. It's very user-friendly. And then at the end of the day, when that offering is fully subscribed, you know, we hit issue, and then digital tokens are they're digital stock certificates that, in this case, come with the tax benefits of investing in oil and gas. But we issue those digital tokens directly to whatever wallet you have attached to your account. So when you attach your wallet to your account, we don't get control of that wallet. Attaching it just means you've given us the address, and so we know where to send your digital security tokens. And then whenever the asset you've invested in starts producing, we get cash flow from the operator. We convert that into USDC stablecoin, and then we distribute that through our smart contract based on the cap table of that asset, and it distributes that USDC directly to your wallet, either on a monthly or quarterly basis, depending on the asset. As to answer your question about distinguished from a crypto token, it's not vaporware. It's real-world asset investing. There's hard assets behind it. So
very good.
Big difference there.
Yeah, and I mean, whenever there's a conversation about RWA tokenization, the biggest criticism is on the regulatory landscape and how regulation is holding everybody back. What has been your experience in navigating through the regulatory landscape, and have you actually faced any hurdles? How did you go about them?
The first thing I'd say is that we do everything in an SEC compliant manner, but there really haven't been many hurdles based on our business model. Since we're managing partnerships that our investors are investing in, we don't need a broker-dealer license. But probably the biggest thing is just the change in the attitude of the SEC, which has come in with the Trump administration, which everyone at this conference is fully aware of. I'd say the single biggest impact I see going forward on the regulatory landscape is really with the Genius Act and the impact on stablecoins. Because the way I look at it, stablecoins are the fuel to buy real-world assets on chain. And those stablecoin issuances now, I mean, it seems like every time you open social media, you see somebody else's announcement about another $250 million of stablecoins that have been issued on a blockchain. So stablecoin market cap, the last time I looked, was something like $230 billion and rising. Every time you say it, the number's out of date. But that stablecoin market cap, I think, is going to continue to grow. And I think that's going to stay on chain because of all of the other payment mechanisms and payment rails that you see that are now adopting stablecoins. So, and then in a downturn, I think people are going to convert their digital assets, the other things they may have invested in whenever the bear market comes. They'll convert those to stablecoins. They'll leave them on. What are they going to do with it? We think they're going to start looking for yield-bearing assets that produce real cash, and we pay you in stablecoins. So we'll help grow your pile. So I think that is going forward. I see as one of the more dramatic, but it's also a very accommodative SEC. But what about from your perspective, Waqas, since you see it more internationally, I just see it from the U.S. How do you see the regulatory landscape?
So again, there's a bit of a pattern there. To your earlier point, it's not fair to criticize U.S. for being slow in adoption, because you see that adoption of any nascent technology, new business models is easier in city-states. So that's why you see the Singapores and the Dubais and the Hong Kongs of this world adopting technology and newer business models fast, because they're small, they can be more agile. Countries the size of U.S. cannot move at that pace. So there are local dynamics at play. So areas which are spearheading, or the jurisdictions that are spearheading this space, is obviously UAE is one of them. That's where I'm based. So for everybody's knowledge, so UAE is the only place in the world where when somebody buys tokens of a real estate asset, the land department actually issues you a title deed. So there's a title deed issued by the regulator for the tokens that you've bought against property. So that's how far they had, that's how far back they've integrated the regulatory landscape with the tech. But then the pattern that we see is that once there are a couple of pioneering platforms that come about in a particular jurisdiction, and when these platform operators or founders work closely with the regulator, it turns into a co-creation. We've worked in jurisdictions where the first few platforms, or with the first few platforms, the policies have actually been written down for digital assets by the regulator. And that's because these platform operators very clearly state the macroeconomic benefits of these new economic models. And once the regulator sees that upside, they are much more willing. So we see the regulatory landscape catching on very, very quickly, and we see them happening on the back of a couple of pioneering marketplaces. And we see this in a lot of jurisdictions. So the regulation is getting co-created with the platform operators, so the founders. So the tech founders are actually, enabling a lot of regulation.
Writing the regulations,
yes. Yeah.
I can't say that we've written any regulations, but I'm envious of that position.
Yeah. So, Chip, when is Tokenized Energy going live? Because we see a lot of noise around RWA tokenization, but there are very few live platforms out there. So what's your go live plan like?
Well, happy to say that we are live. We've taken a lot of the, sort of technology risk out of the business. You helped us build the platform, but we have now tested the platform successfully. So we performed a trial investment. We went, Adrian and my partners and I, we acquired a non-operated working interest in some wells that were being drilled in the Bakken Shale in North Dakota, operated by a company called Slawson. We also own some of that asset ourselves, and we put some of it on the platform. But we had invited 90 people to participate in our trial. About half of those did elect to participate and invested. We were fully subscribed in a couple of weeks, which for a new platform we were pretty excited about, and also happy with how many people were interested. We got great feedback. One of the things that had scared us that we wrung hands over quite a bit was, we debated about, do we do a custodial digital wallet or non-custodial? We decided to do non-custodial so that you set up your own wallet and attached it to our account. And the reason we were nervous is that, even though when you look at sort of digital asset adoption and crypto adoption, the chart, you'll see it compared to internet adoption a lot of times, and the chart moves pretty steeply from, the left to the upper right. Yet 80% of the people in our trial, which included not just people in my generation, but 40-year-olds and 30-year-olds, but 80% of them had never had a digital wallet. And so we were sweating it because, how can we make this easy for them? How can we make sure this is not an impediment to their participation in our platform? And luckily, most of our people didn't have issues, but of the technical issues we did have, 0 of them revolved around the digital wallet. So we felt relieved that that's the way it went. But we are live. We've got an app in the App Store. We're updating that. That should be done actually any minute now. Getting ready to list some new assets on there. So if you'd like to take a look, please come on board, open up an account with us, and then we'll post those new assets shortly, and come give us a try. The minimums will be low, so come try us out. We think you'll like it. So Waqas, what do you see? What do you think is in the future for Avanza, but also what do you see in terms of tokenization in the U.S. now that you've developed a U.S. presence? Some of the folks we've spoken to today that are doing a lot of different things, which is great. I hope more of you come by later. But what are you seeing?
So in addition to Tokenized Energy, we're launching another real estate tokenization play called RPOL, O-U-R-P-O-L. It stands for Our Piece of Land. So, and through RPOL, we've acquired the first asset in Carrollton. It's actually a warehouse, which we are converting into a co-work space. And we're offering, we've launched the tokens. We're going to launch the tokens in December for RPOL. So our take on RPOL is very different from your conventional REIT models. We will have a lot of project financing happening through RPOL as well. So we're talking to a lot of developers who will have, let's say, 200 units on the platform and fund the construction of those assets. We have a secondary market going on RPOL as well. So that is one thing. In addition to Tokenized Energy that we are doing in Texas, we're doing RPOL. We're talking to a couple of auction houses for tokenization of artifacts. So that is something that is happening. We are aware of that. We are in those discussions. There are financial instruments that are getting tokenized. So I think Texas is also going to follow the pattern, where there will be financial there'll be real estate, there'll be financial instruments, and I'm sure Tokenized Energy is going to galvanize and catalyze commodity sector, once you've gone live. So you'll see a lot of other.
We hope. I mean, if you look at all the other asset classes that have already been tokenized, I mean, natural resources is the hole that we're trying to fill. I mean, you've seen, art, real estate, gold. You mentioned financial products are the biggest ones, but we're hoping to fill that missing gap with natural resources.
Very good. So I think we're almost out of time. So final question, what is the future for Tokenized Energy?
Well, I think the challenge in front of us now is to capture more of your eyeballs and participants for new account holders and hopefully new investors. But I also think ultimately what you'll see from us, the question we get from the people that participated in the trial, why does this need to be in a token? We want to invest in your stuff, in your assets, but why does it need to be in a token? And the answer in our minds is it's because what comes next to your question, and that is we're going to be offering, DeFi options through our site so that, when you invest through the site, you can recycle the money either in future offerings or in DeFi options that we'll be able to offer through the site so you can compound your money while it sits there waiting for the next opportunity. You'll see strategic partnerships, a lot of which we have in the works right now. And I think you'll also see international expansion because I think there are a lot of people in foreign countries that are very interested in real assets in the United States. So if we can get in front of those eyes, I think you'll see international expansion. for us as well.
Brilliant. Thank you very much, everyone. You've been very patient. We are in the media room. We have our booth over there. So if you want to, understand more about tokenized energy or what Avanza does, please do drop by. Thank you very much.